Almost like clockwork, we start August and we already have a fairly decent correction underway. Markets down over 1% yesterday. We are looking to take out the 20-day moving average today. So here's what you need to know before the bell this morning. We've been talking about this correction that we're going to have, and the kind of was saying this ad nauseum over the last couple of weeks is, hey, expect a 3 to 5% correction, probably August, September, we'll get that. And almost like clockwork, we start August and we already have a fairly decent correction underway. Markets down over 1% yesterday. We are looking to take out the 20-day moving average today. So again, that's really been running support for this market really ever since that March kind of turmoil that we had with the banking crisis. Since then, the market's been running right along that 20-day moving average. Just a break of the 20-day is not a big deal, right? It's just a level of support that we've got going on right now, and we've broken that 20-day before and then gotten right back above it. But importantly, it's the 50-day moving average that is sitting here right around 4280 on the S&P right now. That's going to be kind of the next kind of big level of support for this market to hang on to, which is also important because that keeps us within kind of this running trend channel of the markets. And the markets have been in this very defined trend channel ever since that March low. We've just been kind of running right along a very narrow channel. So the market kind of breakdown here below this 20-day, we're going to start to test the bottom of that trend channel from the March lows. And then again, that kind of puts us in spot for that test of the 50-day moving average. Now, if we get below the 50-day moving average, that's still not a bear market. It's still not a crisis situation. And it's very possible that we could come down and ultimately kind of test this. Even the 200-day moving average would not be out of the question. That'd be about a 10% decline from the peak. Certainly normal for within any given year of the market, and particularly given that we've had such a strong advance in the markets this year. A correction back to the 200-day moving average is not out of the question at all. I don't really expect that to happen over the next month or so. It certainly could, but if it does, again, that's you're gonna have a lot of the bears come back out of the closet and saying, "Hey, you see, I told you it was just a bull trap. Now the bear market's back in control." It's not. It's just going to be within kind of this running, kind of bullish advance of the markets. But most likely, I expect that somewhere between the 50-day and maybe the 100-day moving average at worst, the market's probably going to find its footing. And important about this is that we've got two things going on that suggest we've got a little bit more of this sell-off to go, is that we did trigger a MACD buy signal again yesterday with that sell-off. So we now are back on a sell signal from a fairly elevated level, but the relative strength index of the market is already heading back towards oversold. So we may have a day or two more of this kind of sell-off in the markets. We find some short-term level of support. The market probably bounces. And then we may try to run a little bit lower here and again come back down and work our way towards that 50-day moving average. Or the other option is we just kind of trade sideways for the next month or so, and markets really don't go anywhere. We kind of work off some of these broader overbought conditions, allows the moving averages to catch up with the market. The market kind of resets itself a bit, and then we get that potential end of the year rally, October, November, December, which typically tends to be, well, it's the beginning of the seasonally strong 6 months of the year. So we get into a stronger kind of end of the year rally. And I would expect that rally to occur because you have a lot of portfolio managers trailing the markets right now, needing to catch up on performance. So any kind of pullback we get here is likely going to be an opportunity to buy the dip, so to speak, for professional managers to get that kind of performance picked up before end of the year reporting, because that's their job, right? That's what they got to do. But that's what you need to know before the bell this morning.